Hey guys and gals, thanks for joining us. Welcome to another episode of Finance by David. And today we're going to learn how to input your escrow fees into your Calyx point file. Let's get started. Okay, we are now in our Calyx point and we are going to go ahead and find our test file. Here is an FHA test file. The next thing I want you to make sure you do is fill out at least the borrower's first name, last name. You want to make sure you have their social, date of birth, citizenship, cell phone number, and email number. It's not necessary for a loan estimate, but I recommend you put that in there to start your file. Then on your subject property, to be determined, put your zip code in and that'll populate that city. The next thing you're going to do is make sure you fill out your loan summary section. Your FHA loan is where we're going to have primary residence, purchase, first mortgage. Go ahead and input your rate. We go based on the middle FICO score, your term 360 months, your purchase price, down payment, and your loan amount will populate. Scroll down, make sure your principal and interest payment is there. Then you put your estimated monthly fire insurance, your property taxes. Here in the county of Los Angeles, we're at 1.25 property tax rate. Then you have your mortgage insurance. We're in May of 2013, so the mortgage insurance just changed this year to 0.55 per month. The next thing you're going to do is over here on the left, you're going to scroll down to the fees worksheet. This is where you're going to fill out your fees in Calyx Point. Now, it's very important that you have your escrow and title fees. So if this is a purchase, reach out to the escrow company and request their fees, or an estimated closing statement. It's the same thing. If it's a refinance, do the same thing with the escrow company you started the refinance with. So the important pieces here are going to be the disclosure type is going to be trade. Your date prepared, today's May 24th of 2013. It's going to be a purchase that we're going to go ahead and get fees for. Your loan amount will automatically populate, your rate, your term, your months as well. Your lock, you can input your days that you're going to lock for, when your lock expires as well. This is if you lock before you submit the loan. This is not necessary if you're going to have your wholesale lender disclose your loan, because if they disclose for you, then you don't have to do all of this stuff. You can just email them the estimated closing statement and they'll take it from there. Next, intent to proceed. When your intent to proceed was signed, how it was signed, application date, estimated closing date. We have a closing date of about a month. Your first payment date. Remember, you always skip the month after closing. So if we close in June, we're going to skip July and the first payment is August 1st. Scrolling down, if you're going to charge an origination fee, you would put your origination fee here. In this case, we're going to go lender paid. So we do not put an origination here. If you are going to go lender or borrower paid and have the borrower pay your origination fee, let them know that you're getting them a better rate, because 99% of the time that's the case. You get a lower rate, but you do have to charge your origination fee. We're going to go to the lender fee. Any wholesale lender is going to charge a lender fee. Scrolling on down. Next, you're going to go to box B, services that you cannot shop for. Now I'm going to go ahead and share my screen with an estimated settlement statement. Now you should be seeing this estimated closing statement on the right. We're going to go ahead and get our fees a little closer to where we can see them. Okay, so this is just fine enough. On the left side, we're going to start with your standard fees, your third-party fees that you cannot shop for, your appraisal fee, credit report fee. In 2023, the credit report fees jumped up from a $24, $25 charge per person to a $45 charge per person. So the fees basically doubled to pull someone's credit report. I know that this is going to be felt across the industry. It's going to take a little bit to catch up to people, but it's a pretty big shock. Next, any tax service fee, flood certification fee if the property is in that zone, Your mortgage insurance premium, I'm going to skip this mortgage insurance premium and I will talk about this later. This is for an FHA loan only. Next, we're going to have our home warranty. We see that we have our home warranty here on our estimated closing statement. What I like to do is highlight it when I put the fee in, because that tells me that we already input this fee. Next, we have our Remax 1 for base commission fee. This is $4.95. We inputted it here as well. We're going to go ahead and highlight this one. Notary fee. Notary fee is $2.50. We go ahead and highlight this fee as well. Next, we move on to section C, services you can shop for. We include the title fee to Fidelity National Title Company, $12.50. Next, we're going to have a sub-escrow fee of $62.50. We highlight it when we input the fee. Recording fees are sometimes in 2 or 3 lines. You want to go ahead and add them up. And there's a section here on section E, taxes. There's a section here, E, taxes and other government fees, where you can put your recording fees of $175. So once we've inputted these recording fees, let's highlight all of the recording fees so that we make sure we know we already inputted those fees. And we go ahead and update our fee, $225. There's also a transfer tax that is accidentally put in here. We want to take that off. There's no transfer tax here. That's usually for the seller. If you scroll to the left, you'll see that here on the seller side. Now, moving back up to our previous box, section C, services you can shop for, escrow and title fees. We're going to finish up with the endorsement fee. We place that here. Then we have our escrow fee of $17.80. Next, we're going to have our loan tie-in fee of $250. Next, we'll have our messenger fee. If you click the drop-down arrow here, you will see that there are a couple of different options for you to choose from. You can easily type over that and input whatever fees you need to input. Refundable cushion, $350. Okay, so once you're done, you're going to go to section F, where it says prepaids. Here you'll see that you put your interest. We went ahead and put interest for 30 days. It automatically calculated for us. Next, we put our homeowner's insurance for 1 year. It automatically calculated that for us. You keep scrolling down. Then you scroll down and you'll get to section G, initial escrow payment at closing. Here, you will have the reserves that you need to reflect for your closing. We'll have 3 months of hazard insurance and 6 months of property taxes. Now I'm going to show you our impound account for Los Angeles County on how I calculated these 6 months. This is for a closing in June. If you need to include any seller credit, closing costs paid by seller, for example, if the seller gives a $5,000 seller credit, this is where you would input that information. Now I'm going to show you, once you're done with this section, you can go to your loan estimate on the bottom left and double check your information. to make sure that all of your fees look right. One thing I did forget to mention, it is very important that you click the escrow box here on the right side for both of these, or your loan estimate that you print will not reflect this in your payment. It will only reflect it in your closing costs. Now you can go to your loan estimate on the bottom left, and if everything looks good, you can go ahead and print this loan estimate to show your borrowers. Here you will have your issue date, the borrower's name, your subject property, purchase price, loan amount, rate, principal and interest payment. Here you'll have your total payment broken down with mortgage insurance, taxes and insurance. Down below, you'll have your estimated closing costs, which will be on page 2. We'll go through that in just a moment. Then below that, you have your estimated cash to close, which includes your down payment also. See? Here we have your closing cost on page 2. On box A, you're going to have your wholesale lender fees and any origination charge you would charge if it's borrower paid. Box B, you're going to have your third-party services, your appraisal fee, credit report fee, home warranty, processing fee, RE/MAX run-based commission fee, and notary fee. Below that, you have your escrow and title fees. Then they add them up here on the left side. On the right side, you're going to have your recording fees, homeowner's insurance for 1 month, interest, your homeowner's insurance for 3 months, property taxes. Then you have your impound account with 3 months of fire insurance reserves and 6 months of property taxes. On the bottom right, you're going to see your total closing costs plus your down payment. And this is the amount of money the borrower needs to come in to close this purchase of $640,000. Mind you, this is going to be a lender paid loan where the lender is going to pay our origination fee. If not, we would charge the borrower whatever points or fees up here, and we would add that to this fee below. Now let me show you, going back, if you want to include mortgage insurance or an upfront mortgage insurance premium, this is what you need to do. You need to click mortgage insurance on the bottom of your fees worksheet, then input 1.75%, and it'll automatically populate your upfront mortgage insurance premium. The issue that I have when doing that is, I'm sure some of you loan officers have seen this before. You're going to see that the mortgage insurance is reflected on box B, and in your closing costs, since your loan amount is increased by 1.75, which is the upfront mortgage insurance premium for FHA, the system thinks that the down payment is now lower, going down to $11,592, which is incorrect. And the borrower can get confused. I've seen wholesale lenders disclose this way, which is incorrect, but that's the way the system calculates it. And we need to educate the borrowers when they see this. That's why it's very important that you review your loan estimate with every single borrower. Thank you. I hope this was helpful. You're welcome if it was. Like and subscribe for more.